Good afternoon, everyone, and welcome to today's Payments Association webinar on why do banks need to embrace the digital wallet revolution. My name is Berenice Lamblin, and I am part of the production team at the Payments Association. So before we get started, I'd like to go over a few things. You can submit your questions to today's speakers by typing your questions into the Q&A tab of the control panel. You can send in your questions at any time, and the panel will address them during the Q&A session at the end. You can ask questions anonymously if you do not want your name attached, but we will be moderating them as they come through. This webinar will be recorded and we'll send a link around to watch on demand afterwards. If you have any technical issues, feel free to send a message through the chat box to Christina Gatens from the Payments Association. So I'd now like to introduce Anton Kornilov, who is a payment expert at Kernel Acumen and who will lead today's panel. I hope you enjoy. Over to you, Anton.
Thank you very much, Berenice. And everyone, welcome to today's webinar. Why do banks need to embrace the digital wallet revolution? As Berenice said, I'm Anton Kornilov, Payments and Growth Strategy Advisor and founder of Kernel Acumen. Before we jump in, I would like to connect today's session to two other conversations that we've already had in the Payment Association community before. Last year, in TerraPay-sponsored webinar, The Wallet Without Borders, we focused on 6 themes. Interoperability as the future, domestic-level user experience expectations for cross-border, wallets evolving beyond payments, regulatory alignment and compliance, collaboration outpacing competition, and protection keeping pace with innovation. And more recently at Pay360, we discussed wallets not just as a payment button, but as an experience layer, as an orchestration layer, and that what it means for banks in terms of customer journeys, data, and accountability. So today we'll build on that lens and we'll keep it practical and take the bank's viewpoint on this. So I would like to welcome the speakers. If you don't mind coming off the onto camera and introducing yourselves, basically your name, your role, and just the lens you're bringing today. And then we'll jump straight into what's changed since last year. So David, over to you.
Thank you, Anton. My name is David Backshall, and I'm VP of Global Partnerships at TerraPay. Glad to be here.
Thank you, David. Lucina.
Thank you so much, Anton, and thanks everyone for having us. Lucina Yanas, based out of Zurich, Switzerland. I'm leading our partnerships organization for Google Wallet development across the EMEA region. Very nice to be here with you.
Thank you. And for those of you who have followed the fate of this webinar for a while, now we have Marie, who is, in a true team spirit, is stepping in and as a substitution for Annette. So Marie, please introduce yourself. You might need to come off mute.
Yeah, thank you. Very demanding, mute and camera, That's great. Anyway, I'm really pleased to be here. A little bit of a last minute, but I think we'll be fine. I think I'm here. I'm here in the capacity as the payment domain leads in WeBuild, one of the large-scale pilots where I'm working with Annette. In terms of my day job, I'm heading up identity solutions at Mastercard. Very pleased to be here, everyone.
Thank you, Rash. And Saira, over to you.
Fantastic. And that leaves me. So Saira Khan, I work for First Direct, part of HSBC, heading up innovations and partnerships and all things in between.
Perfect. Thank you. Thank you very much, everyone. So to open today's conversation, let's kind of cast our minds back to the themes that we had last year. And my question is to all of you, is what has changed the most, in the last 12 months? And let's try to, in order to cover the breadth of the themes that we had last year, maybe we just pick a couple per person. So David, starting with you, since last year, last year we said that interoperability was the future. What has changed in the last 12 months in practical terms, in kind of wallet connectivity, cross-border reach, and why does it matter for banks?
Yeah, so actually we've seen a really big demand for, in particular banks across different regions. And they're seeing a big demand because obviously customers want optionality, and optionality is a big theme. And through the demand from the customers, they're seeing different ways that their customers choose to pay and send transactions cross-border. So they're seeing that demand, and you know, there's some real life cases such as you know, content providers, freelance workers that want to be paid around the world, and also, you know, SME type businesses. But you know, for those individuals that want to receive funds, they are choosing wallets, and of course, you know, with a wallet, you don't have the traditional cutoff times as traditional bank accounts would. So there's a real on-demand requirement for those transactions to be delivered in real time, but also 24/7. So through these kind of you know, demands, and where actually banks see opportunities, clear opportunities, it's then, you know, looking at how they can provide this optionality, and also looking at the different layers that they can provide their customers for that choice. So it's through these types of conversations with financial institutions, the banks, and also as well the infrastructure players like ourselves, but also working with you know, organizations like Swift, like Visa, like MasterCard, and others. So we're really seeing a cross collaboration of how partnerships then start to evolve. And this is the really exciting thing that we'll learn more from, and also very exciting examples that we're seeing today.
Thank you very much. Thank you. And Lucina, over to you. Maybe, well, last year we also said that consumers increasingly expect cross-border payments to feel like domestic, right? Same speed, same simplicity, transparency. And from your perspective, what has moved the most since last year in terms of wallet experience and kind of customer expectation, in addition to what David has mentioned about, you know, speed and potentially, you know, 24/7 availability?
Yeah, thanks, Anton. Both moved a lot. So in terms of customer expectation, in terms of the experience that we are trying to deliver from the wallet perspective, yeah, both of those directions accelerated in the last 12 months. So I think, first of all, we've seen on the Google Wallet side massive shift towards what I call digital everything. So for our user, the question, I think, has evolved from, can I pay with my phone? Can I complete a transaction with my phone? To something that is more now around, can I leave my physical wallet altogether at home, right? And so I think we've moved far beyond just credit and debit cards. We are now digitizing basically the entire physical pocket of our users. So everything from government-issued IDs to corporate badges to hotel keys to car keys to health passes, all of that can be digitized using different protocols, different technologies. And I think from the user perspective, the normal now means having their entire identity and access and payment cards and lots of different other passes and objects stored securely in their digital wallet. And I think what has really truly moved the needle is what we call the contextual readiness. Users now expect the wallet not to be passive anymore, but to be more proactive. So the wallet, the digital wallet, shouldn't just sit, you know, on the phone of the user and waiting to be opened. It should be smart. So if you are walking to a train platform, if you are, you know, buying something in a grocery store, this transit pass that you are about to use or the loyalty card that you are about to present at your favorite retailer should just very smartly and contextually appear on your homepage automatically. So it's really about wallet understanding the user's intent, user's location, and to remove the friction between you know, those additional actions that the users should be taking, right? And then finally, on top of that, because, you know, we can talk a lot about user experience and this kind of seamless experience becoming more and more a reality, but I think we've also entered into a new era of what we call the invisible security. So we are moving away more and more from the friction that would be something of the past, right? Things like typing your PIN, waiting for a SMS code, even worse, waiting for a call from your bank, you know, to verify your transaction, into the rise of things like passkeys and other technologies that are basically quite effortlessly happening in the background for the user. So a simple glance at your phone, a fingerprint, will take you to authenticate even for a high-value transaction, or to share your digital ID using your digital wallet. So I really believe that in 2026 and beyond, forcing our customers to remember a manual password or a 4-digit code or any other kind of information like this, they don't see it as secure anymore. They see it as a broken user experience. And we should all keep it in mind as the technology evolves.
Amazing. So the themes that I heard from you, it's smart wallet, proactive wallet, right? So invisible security. So definitely all the themes that we probably didn't discuss that much the last year, but definitely they were in train, right? So now, Marie, maybe over to you to just talk a little bit about regulation and compliance kind of becoming more central as wallets scale, right? Especially in Europe, we've seen the momentum around things like digital identity, more bank-led wallet initiatives, and from your perspective, what has changed the most, in the last 12 months in the trust layer, right? So it's the regulation, identity, verified credentials that could make kind of wallet experience easier to scale, right? So thank you.
Yeah, no, of course, that's a great question, Anton. And the vision that Lucina is drawing up for us in terms of having everything every day and everything that matters to me really in my wallet. Of course, my cards, they're already there, but also my identity cards and everything else in my wallet. It really requires this trust layer to make sure that what's in the wallet is mine. And when I'm presenting it, the relying party, whether that's a merchant or a bank, needs to be able to, they need to know that they can trust it and it's going to satisfy the regulation. So I see that there's been a pretty important shift from last year, and this market is evolving so quickly. It's unbelievable. The regulation that the European Commission introduced back in 24, eIDAS 2, has driven maturity and finalization of key global standards as a starter to make sure that we can get interoperability. The technical specifications underpinning the eIDAS regulation as well is now, I think it's version 2.8 or something, but it's going quickly and it keeps getting updated as well, and it keeps being refined and is now more and more mature. I also see the clarity around whether the wallet should be used for payment authentication, maybe even payment initiation, and how that will satisfy existing payment regulation like PSD2, but also the future in terms of PSR and the AML regulation as well. I see there's a lot of clarity on that as well that's now coming into the market, and that means that banks and others can now plan on how they can use the wallet for letting their consumers opening a bank account or preparing for the use of the wallets for strong customer authentication. So that's a major shift that is now the technology and the regulation and the user experience with improvements happening on the operating system side as well means that it is possible and desirable to investigate how the identity wallets, at least the standards-based wallets, as I call them, can be used. And then, of course, in parallel, we see initiatives like Wero and how the growing bank support for embedding the Wero SDK to make it simpler for the consumers and satisfying the consumers' expectations about simpler payments, especially peer-to-peer payments as well. Of course, this is going to, we're not done yet in terms of that transition, but it's certainly a lot more mature and easy to see where it's going this year than it was last year. So if we take a look back again for the last 12 months. So hopefully that gave a few perspectives at least on what's going on in Europe and the trust layer.
For sure, and it feels like, as you said, a lot has happened, but also I kind of plays to the theme of wallets becoming a lot more than just a payment wallet, right? So then that's kind of keeps developing. And so Sarah, maybe over to you. So again, a couple of themes from last year that we haven't covered. One was that the collaboration will outpace competition, right? And then how can protection keep up pace with innovation, and who's responsible with, in this great collaboration space when something goes wrong. So from the bank point of view, like what do you feel has changed in the last kind of 12 months along those themes?
Yeah, and I think there's so much there, and I think that we've covered off quite a lot of themes within that. I think there's the infrastructure, there's regulation, and there's a customer kind of a perspective as well. But I think I will say that the biggest theme and the change for me has been probably behavior shift and the speed and execution of the adoption and engagement that you're getting through the wallets. And I think that can't be, sidelined at all. And I think we need to kind of embrace that. So I think, it's no longer a kind of a question, should banks embrace digital wallets? I think digital wallets from a customer perspective have become like, a channel of choice as well, and something that they turn to. So, the tech players are playing a huge part in that from being a front door experience, from that perspective. I think then you've got payments are starting to feel like they're becoming embedded and more invisible from last year. I'm starting to feel, consumers are no longer thinking in terms of like card payments or bank transfers or rails. They think very simply in terms of a one-click checkout, tap to pay, an in-app experience, an embedded experience, based on where they are in a journey. And I think that that's really been the biggest shift I'm seeing. It's more from a customer and a speed perspective. And I think that what digital wallets are doing, and on a real positive, is they're removing that friction and collapsing that payment experience into a single interaction. I think that's something that we should all be very proud of from perspective of, serving a need and an engagement. If we start looking at themes like, a real-time theme right now, you've got sports happening, you've got the World Cup coming up, people are going to be buying tickets, wallet experiences are going to be, huge. Airline experiences on the wallets are living within that, and they're actually, kind of nudging you towards your next move. And I think that the future looks towards that personalized experiences. So I think that from a banking perspective, I think we need to kind of embrace it. We do have a major area that we all need to not kind of sideline, which is fraud and security risks. As the speed and execution kind of gets to a point where we need to personalize these experiences, we can't then ignore, how do we make sure those payments and that seamless experience is safe, and secure for the customer. So I'm taking that real customer lens at the moment, on this, Anton, but I'll take a pause there for a second.
No, that makes perfect sense. And what I loved is, this personalized experience and then the channel of choice, right? So, and this is something that we also need to kind of embrace. So great. Thank you. And so really helpful to hear what has changed since last year. But Sarah, maybe staying with you and
Sure.
just to kind of drawing on HSBC's global footprint and your UK perspective, with the First Direct Bank. How are banks approaching wallets today? What you're seeing, kind of where are you seeing most progress, and what feels most important to get right in the
Yeah.
next probably 12 months?
I think I'm going to stay on the theme. Do you know what? Off the top of head, quick would be data, the the embracing the AI, the personalization, and kind of getting into the center of like how do we process these payments? We sit on a lot of data across the banking kind of sphere, and a lot of like payment, kind of data as well. I think that the real movement here is going to be, how do we start processing that and using it? What are we doing right now? I think there's AI fraud prevention kind of top of theme. Offers and rewards and personalized rewards is something it's something that we're playing towards. Embedded lending, as people's needs come up in terms of lending and loans and stuff like that, that'll be another area. And one that I'm passionate about more than anything is the behavioral analytics and the personalized kind of rewards and the personalized experience. I don't think we're quite there yet, across all of the banks, if I'm quite looking at them. I think that some are doing some very well and some are doing other areas really well. But I think that what we'd love to see, and I think we're going to see it very, very quickly, is that personalized experience. So I have been involved in a pilot at the moment. Really exciting to see the themes that are coming out in terms of those personalizations. And what we're driving from that is then the next experience is how do you then turn that into a loyalty and reward? How do you then turn it into, hey, we know you a little bit better. And your bank is there when you need us versus we're just turning up.
Okay, perfect. And Lucina, maybe because you clearly, maybe you clearly work with a lot of banks in the ecosystem, right? So when banks kind of lean into this wallet ecosystem, where do you see the strongest examples of banks improving, wallet experience for customers, right? In the world of collaboration over competition. Yeah, over to you, please.
Yeah, you're right. We are collaborating with lots of banks, majority of banks in the UK and beyond. And yes, we are very proud of this collaboration. We are really proud of building something together instead of competing. And I think this road definitely should continue. I think if I think about like the most constructive collaboration, I think this collaboration, the strong collaboration, can happen really at the moment when the bank stops viewing the wallet as a competitor of their own app, but starts seeing it as a high performance kind of distribution channel for their needs, for their customers. So I think, again, if I look at 2026 and beyond, the good collaboration for me will be really linked with a very deep future integration between wallet and the bank. Strong, we are kind of moving beyond what we were calling before like simple provisioning or simple tokenization, which is just putting a payment card in a phone and using it to tap to pay. I think strong bank behavior today means that bank is able to leverage some of our most advanced APIs for things like, for example, instant issuance. So we have partners in Europe already now where customers can apply for a credit card, and within seconds of approval, the digital token is live in their Google Wallet. They can pay for their groceries, for example, even before their physical card is even printed. And this isn't really a nice to have anymore. We have some data from our research, from industry research, that shows that digital wallet users, 51% of digital wallet users, have actually stopped shopping with businesses that only accept some more traditional payment methods. So they're really massively turning over to businesses, to merchants that are providing more innovative, more alternative form of payments. So for a bank, I think providing that instant access to money and to a bank account can be one of the primary driver for customer retention and customer satisfaction, right? So that's one of the elements. The other one, in terms of like the good collaboration, I think it's a rich, what we call rich data transparency. If you imagine a bank feeding real-time merchant branded transaction directly back to the wallet, it reduces the transaction confusion, and it reduces those calls that banks are receiving all the time from the customers asking, okay, what is this $50, 50 pounds charge for? By up to 25%. So actually, again, collaborating with wallet, sharing information with wallet can massively save the bank's operational costs and can, again, turn up a better user experience for our users. And then finally, and I think we're going to talk about it quite a lot today, I think the real pioneers when it comes to financial institutions are the banks that are leaning more towards the identity as a service. So we are approaching actually, again, a very important milestone of almost 4.8 billion people, I checked the number this morning, holding some kind of form of digital identity card by the end of this year. And so some of the banks are already realizing that they can become the ultimate trust anchors for those users. So I think if we are able to create this very good collaboration where a bank will be able to issue things like a verified bank status or a proof of age and save it on Google Wallet to then achieve a better scale and then communicate all of those proofs and attributes to merchants, then we can win in that space together, right? And I think to finish that part, I think what is really important for the banks to realize is that through all of this collaboration with wallets, they are not losing the customer. They are really becoming a very important part of customers' digital daily lives beyond just a transaction.
Yeah, and can I just jump in there? I think you said something really interesting around trust is the main theme and word, I think, as you kind of look at these things. But I think the competitive question is it's no longer whether customers adopt digital wallets as well. That is just, as you were talking, I was thinking about this. They already have. And I think that question is done. I think that, Antoine, from last year to this year, I think, are our customers adopting it? No, it's done. They already have. I think the real question is whether banks still own their relationships inside that wallet first economy. Is that still, a bank relationship, or is the customer going into different wallets for that experience? So I think that's a really interesting one. And I know I'm part of a bank, but that is something that's on my mind. Do we still own that customer relationship inside that wallet first experience?
Yeah, that's good. Oh, this is a great perspectives, and let me go one level deeper into kind of the infrastructure question, right? So, how do banks connect to wallets at scale, and what interoperability actually means operationally? David, over to you. Practical questions. So, banks don't want to rebuild everything, right? Right. So, how do they extend the existing infrastructure then to enable seamless payments to digital wallets globally?
Yeah, so what we've been doing over the past couple of years, we've been working with Swift and collaborating with Swift to look at how banks can leverage their existing infrastructure. And the very interesting thing, obviously, over the last year with Swift and the messaging layer is the fact that they've changed now to the new ISO standard, so ISO 222. And also what that means is that it's the ability for banks to provide, structured information. So that means that without banks having to do any heavy lifting at all, they can actually connect to the plumbing that allows them to connect to the world's global wallets. So this has really been a key theme on G20 around speed, transparency, cost, and of course, importantly, which is a theme very close to my heart, which is financial inclusion. So with that, banks now have the ability to, extend what they already have today in a very compliant way because, within the Swift ecosystem, you have all the compliance built in. From a bank's perspective, they don't have to change anything operationally. There will be a few things from a front end perspective that they will need that they obviously will not do today from a bank account perspective, which is to collect the mobile number of the wallet. So basically, we've been working very hard and also we've been launching with banks right across the globe so they can utilize everything from that infrastructure plumbing into a regulated infrastructure to then allow their customers from a front end perspective to give them choice, to then allow them to then pay directly and the usability and pay directly through their existing bank to wallets all over the globe. And this has really been a game changer because, when you talk about APIs to do integrations, you can be on a project, working on a project for quite some time. So the key thing is about building the trust around new infrastructure. And if you're using the kind of ecosystem of Swift, which was already trusted within the new ISO, and of course, with that you have the travel rule as well. So, utilizing a payment where you can do that payment instantly, it's like making a local payment anywhere in the world. And actually, when you see the difference that it makes, because when people are utilizing wallets all over the world, whether it's Alipay, WeChat, M-Pesa in Kenya as an example, low value payments, sending that cross border, but doing that in real time makes a significant difference. So obviously for money to flow and financial inclusion, and that's making a real difference on the ground as well. So it's really interoperability is the real unlock here because I think, as we said before, wallets is not an option really for banks now to offer their customers. It's really a must because we are just seeing the demand. And also as well, when you think about the different types of user cases, and we have these real-time user cases, it's not just from a P2P perspective, but also from a B2C perspective as well. So we're actually seeing corporates utilizing payouts or refunds to digital wallets. We're also seeing this for content providers as well, marketplaces. So there are many, many different multiple user cases, and these are the different themes that the banks are picking up. So, from that experience of being able to leverage that infrastructure, providing customers optionality, and being able to kind of reach those different themes across the G20 is really giving that drive and momentum to banks adopting this new optionality for providing wallets to their customers.
Thank you, David. It's great because the word trust keeps kind of popping up in this conversation, and not only the kind of consumer trusting the experience, but also banks trusting the infrastructure, right? So and connecting to it, and kind of maybe Marie, building on David's point, that kind of to scale the cross-border. I wouldn't say connectivity because I think let's assume that connectivity is there, but actually kind of what you need to build in terms of the building blocks of trust on top of that connectivity in terms of maybe compliance frameworks, identity, verified credentials, like, which use cases would be probably, which are the most ready ones in the next 12 months, right? So what is industry doing to build upon that layer of connectivity that is being provided already?
Yeah, I think it's an interesting question, a little bit complicated. It depends a bit where you are for that cross-border services as well. There's a very deliberate effort within the EU, and being biased, living in the bubble of WeBuild. Within the EU, there is put in place technical interoperability through the ARF and the use of the global standards for that. ISO 18013 as well as OID4VC. And there's also the regulatory alignment to make sure that when you use your wallet and your identity credential in order to open a bank account, it's satisfied AML, the customer due diligence. So, and without the legal and the technical interoperability, it becomes very hard to go across borders. I cannot yet take my Norwegian bank ID and open a bank account in the UK. I did ask, but they didn't accept it because you don't have that the legal framework to trust a digital credential. They did take my passport, fortunately. So we have to get to that level of legal and technical interoperability beyond the EU. I think that's an important one. And we see the early stages of explorations. There might be the odd pilot between Canada and France or some other countries in order to see what is the levels of assurance. Can we find ways of justifying this when it comes to the regulation as well? So I think we will get there. I think for payments, to be able to use your wallet across borders for payment as well, we do need to look at existing infrastructure. As well as how so look at the success of the existing operating system wallets, the Apple Pay and the Google Pay. They are conforming to existing standards. That's why you can use them on a point of sales terminal or even e-com. The typical domestic wallets today are optimized for with their own APIs and their own ways of handling risk, consumers, authentication, and so forth, for a particular market, which makes them very hard to scale across borders. So that's, I think, is a topic that we still need to address around payment initiation, payment authentication. But with the developments of common technical specifications as well as alignments on the regulation, especially in the EU, we see that there is opportunities now for using the wallet also for payment authentication as well as payment initiation with verifiable credentials holding digital payment credentials. You asked a good question about use cases that will be most ready in 12 months, 24 months. The most immediate, knowing the timelines of what's happening in the EU with member states should have wallets by the end of this year. It's Christmas present, 24th of December. Might take a little bit longer, but it's coming. It's a train that's on its way. That wallet will have identity credential, PID, and it's aligned to the timelines with the AML regulation as well, which is coming into force in the middle of next year. The banks must use the wallet for authenticating, onboarding customers, at least as an option if their customers chooses it. So the timelines actually fit with the availability of the wallets, the identity credentials, and the needs for and the regulatory equivalence or the way that the digital credential can satisfy the customer due diligence within AML. Convoluted way of saying, I think the first use case could be account opening or account verification using the PID in the member states in the government wallets for opening a bank account. And then I can take my newly found wallet with my government issued PID and open a bank account. Maybe not in the UK yet, but at least in some of the other EU countries. So that's a very, very interesting cross-border use case where you've achieved regulatory or technical and legal interoperability. And it's solving a really tricky problem. It's really hard today to open a bank account in another country based on an identity credential held in a digital wallet. It is not really possible at this point in time, but it will. And that's 12 months from now, thereabouts, maybe 18 months from now. So I think that's a very interesting use case to observe and see how we can get ready to prepare for that.
Okay. Wow, it's a great example. It's kind of a very real, makes it very real, right? So beyond payments, and we kind of looked at now, interoperability, global interoperability, now alignment of various parts of regulation, and maybe now, Lucina, coming to you. So how do we make all these things feel seamless for users, right? So is there something else that we need to do, or the majority of the building blocks on that side are already in place? What do you think?
Yeah, very good question. I think to make it really truly seamless, we first of all need to look at it a little bit from like the paradox side. How we can make the security so secure, so strong that it's like bank grade security, but so quiet, so invisible for the user that it's almost, completely invisible, completely seamless, right? And I think from the Google Wallet perspective, there are three things that must be true. And Mari, you touched upon the first one, that is the trust layer, and the standardization and the global standards that have to be met. I think for the user, for any kind of Lambda user, seamless means that their wallet works exactly the same way at the tube station in London, at a merchant in Berlin, during an event in Singapore, right? And for that to work so seamlessly, the industry has to align on universal languages. And it can be things like NFC protocols that we've aligned on many years ago, and that's why now payments and all of the other credentials that are using NFC protocols can work so seamlessly. And then, for example, crucially here in Europe, on the eIDAS 2.0 standards for digital identity. So indeed, back to your point, Mari, from before, I think if the plumbing is fragmented, the user experience will be fragmented too. And we need to almost adopt, I would call it the roaming, mindset for digital credential, the same way that we've done for the mobile networks many years ago, right? So that's the first element, and again, very aligned with what Mari mentioned just before. Secondly, we also have to lean into hardware-bound security. I think in 2026 and beyond, we don't just protect data with software. We need to protect it with some kind of additional secure vault on the phone. On the Android side, we are building something that is called Strongbox, that will be part of the Android hardware, that is part of Android hardware, Android device, that really ensures that all of the sensitive information like users' private keys or biometric templates never leaves that vault. It's really part of the security on the hardware devices, and it's physically isolated from other parts of the machine, right? And finally, I think, again, not ignoring the user perspective and not ignoring the user experience, I think all of us have to work on some kind of consistent trust templates or trust signals. We've done quite a few research in which we've seen that actually users don't really want to do like 5-step security checks, but they want to feel safe. And if we want to actually provide that safeness feeling to our users, we need to work on this UX consistency that is so vital for the user. So they keep safe, and they keep on seeing the same trusted signals, the same trusted marks, anywhere they go in the ecosystem, right? So things like green, check mark, verified badge, some kind of trusted profile validation that we can all provide consistency will be those subtle signals for the users that will kind of show to them that they are protected and they can trust the website or the technology or the platform they're on, right? So again, from the Google perspective, I think we are really looking at that whole ecosystem with the idea that we want to keep this incredibly complex plumbing on our site, so then the external user experience can be incredibly simple, and in collaboration with you all, making sure that we are building a very trusted and very well communicated infrastructure to our users, so they can just feel safe and go through their day.
Fantastic, thank you. So the kind of the three takeaways, so I loved it, the roaming mindset. That's fantastic. Then enhancing security with hardware security, right? So and then this trust signal. And I think it applies not only in Europe, right? It applies globally, all these three things. So just for the participants, for all the participants who dialed in, just a reminder that we have a Q&A option. So if you would like to ask our panelists any questions, please send them through the Q&A option. I'll try to then ask those questions. And for you to just think about a couple of great questions, let me ask my last question to all four participants. And I think somewhat you've already touched on that. Probably you look forward to maybe Christmas this year, so it's about kind of scary to think 6 months, 7 months from now already. So, but kind of if we maybe take a slightly kind of longer horizon, right? So, if we fast forward, say 24 months, right? So what will change most in digital wallets, you think? And I'm kind of now looking at the Payments Association, hoping that we'll sit down a year from now and look back and say, okay, how have we done in terms of our predictions? But anyway, so what will change the most in digital wallets in the UK, in Europe, and globally? And let's maybe pick 1 or 2 changes per person, so we don't go into too much detail. So David, maybe back to you. What do you think?
Yeah, and something we've been thinking about hugely at TeraPay. And so last year we actually launched a program which is called Zend, XEND. And this is the global wallet interoperability, which allows wallets to roam globally. So all the wallets that TeraPay has on our platform, as an example, will allow one wallet to be able to send funds and interact with other wallets. So let's say there's an M-Pesa and there's a PayPal in the US. So you'll be able to direct funds from one wallet to another wallet. And also where you're, let's say, intra-Africa, where you have M-Pesa and you have Airtel. So someone from, in Kenya sending to someone in Senegal. So this has never been done before. Bank accounts, obviously, you can do this on the network, on Swift network, but having interoperability with those wallets to be able to send funds, but also as well, interoperability where you have wallets to make a payment at a kiosk, at a point of sale with a QR code as an example. So it gives the ability for someone traveling around the world that where they use their wallet on a day-to-day basis, they can use that as a payment instruction to pay for goods at a payment kiosk, as well as being able to send that transaction globally to any other wallet that's on the Zend network. So that's what we've been building, and we've got some exciting projects and themes that we'll be continuing to launch in the next 24 months. But that's the whole kind of interoperability, allowing wallets to roam and to be able to communicate and connect with each other.
Perfect, thank you. Maybe Lucina, to you, in addition to what you just highlighted.
I will just focus on one shift and one big theme that we are seeing and that we are expecting over the next 24 months. I think the biggest shift will be actually the convergence of identity and payments. So I think in 24 months, experiences like login and pay, or authenticate and pay, or just pay, and like the authentication and and the securization of these transactions happening in the background is going to be a global standard. And indeed, your wallet, it can be Google Wallet, it can be Apple Wallet, or any other wallets out there, won't just hold your money or your credit cards. They will hold your verified attributes, like your age, your residency, your employment, and any other additional information that you might need for a specific transaction, right? And I think why it matters to banks, I think banks really have to kind of secure their role as this trust anchor in that whole development of identities going forward. Otherwise, they are actually risking potentially losing this customer relationship. And Sarah, you've mentioned that before, like who holds the customer relationship, knowing that there is this evolution of additional technologies and platforms. I think this is where banks can indeed become, once again, very important in the digital life of their users, right? That goes far beyond the transactions as we mentioned before. So I think that's the biggest shift I'm seeing.
That's great. So before we move to Marie, Lucina, if you can see a question, any questions in Q&A, there's one for you. So think about how you want to answer that. So Marie, over to you with your 24 months thoughts.
So what will happen in 24 months? A lot more clarity, I think, and a lot more understanding of what a wallet architecture can bring in terms of new services and innovation. And if we take a step back and we look at the wallet as a secure repository that can hold a digital proof, a verifiable credential that can be verified, that's authentic and it belongs to me, and with standard APIs and interfaces to access the wallet, to issue a credential or to ask to get the credential, identity credential or whatever it is presented, and the trust framework around it that we briefly talked about, then it doesn't actually have to be a wallet, standalone wallet per se. Maybe it is just an ingredient in many other applications, including my banking app. And then coming back to the role of the banks. Are they the issuer? Could they be the issuer of proof of income so that I can get a mortgage? It's held in my banking app. That proof of income is discoverable by whoever has the rights, have a reason to access that kind of information, and I share that using my permission. So maybe the wallets, and maybe this is 24 months, maybe it's a little bit later than that, but maybe what we're looking at is technology that's enabling the trusted exchange of pieces of data that you can really know that yes, this is something I can trust. Imagine what that's going to do for agentic commerce or even for industrial agents, where you have a verified intent and you know that where it came from me. It is discoverable in a way that is, nice and user friendly, and it doesn't matter which wallet I hold it in, because all the apps is actually have a little corner of them that is a secure repository for all my digital credentials. So maybe that's a different way of looking at it. I don't know if that's going to be the future, but I see that the technology and the latest enhancements to the digital credentials APIs, or the way that we're looking at the data schemas for a digital payment credential, makes these things possible. So it's an exciting future ahead of us.
Indeed, and let's see. Who knows? So sometimes we underestimate how fast the future arrives, right? So maybe it's sooner than 24 months. Sarah, over to you. What do you think?
I think, and I sit on the camp of optimism as well. And I think that over the next few years, we're going to definitely see a fundamental reshaping of banking as digital wallets start evolving and, payment tools become more intelligent. I think that the UK and globally, we're going to see a convergence of real-time payments and open banking, with AI being an enabler, digital identity, tokenization. We've talked about all of these. And I think that we will redefine how consumers basically interact and manage their own experiences. I think what's really interesting is, I think over the next few years, digital wallets will become a primary way that customers will interact with money. It will change. I know, Lucina, you talked about other things that, maybe there might be a collapse of the wallets and there might be a different behavior shift coming in, but I think that they will live for a while, in my personal view. I think we're going to expect instant, seamless, intelligent kind of financial experiences, talking about the personalized finance that I was talking about earlier. From a banking perspective, I don't think it's only going to be just about providing accounts, but it's going to be how you're trusted. You sit at the intersection of all the different experiences and you connect those digital experiences to where the customer is. So I don't think the future of banking will be defined by who owns the account, but it's really about who owns that customer experience at the time when they need us. So it's not a front door banking experience anymore. I think institutions will need to look at this slightly differently about the relationship as a whole. But yeah, really, really exciting. I think the future is going to look bright. We've got all the tools. It's just about using them at the right place and the right time.
Amazing. Thank you. Thank you. I think it's a great set of predictions. Let's hope we can come in and revisit them in 12 or 24 months time. So I think that kind of brings us to a conclusion of my questions. So we have a few from the audience. So let's just start taking some of them. I don't think we have that much time, but let's cover as many as possible. So Lucina, that question, I hope you can see it in the Q&A. I'm happy to read it, or if you could maybe read it to the audience and try to answer it. It's a bit of a tricky one, but please do.
It's a good one. I like it. Thanks, Justin, for asking. So the question was, if Google implements a hardware strongbox, I will never have to buy a new phone, as my details will not be migratable or transferable. And it's a very good question. So maybe let me clarify one or two things. I think we have to distinguish here kind of the availability of generic information and the availability or the transferability of some of the most sensitive information about yourself, right? So you are technically correct, right? If the actual cryptographic bit is stored in the strongbox, this cryptographic bit will never leave that chip. And that's the point, right? That the whole point is actually for the thieves or for the hackers not to be able to access something that should be only owned and accessible by you. There are other information related to yourself, to your wallet, to other kind of activities that you are doing with your wallet that you can very easily transfer to another new, let's say, for example, Android device, right? But when it comes to actually this real cryptographic part, it should indeed be stored and linked with your hardware, right? So I think we also have to make the distinction between the provisioning and not cloning, right? So when you buy a new phone, we don't copy your car key or your ID from the old device. Instead, we use the cloud to device provisioning, because Google, for example, know that you might be Justin based on the information that you are providing, but then this unique key that is linked with your strongbox should be reprovisioned and re-verified with the issuer of, for example, this digital ID, right? And last point I wanted to make here as well, that I think it's important to understand, is that as a security measure, for example, for digital identity information, so one of the more sensitive information that you might have on your wallet, we only allow one digital identity provisioned by one device. So it means that a user would only hold their digital ID on one single device, and if they are changing the device, they have to completely reprovision on the new device and cancel the previous one. And that's actually the whole idea behind not cloning and not too easily share this very sensitive information between the devices.
Thank you. And there's another question here. So and it actually fits in very well to probably what we've discussed with David in terms of what's changed in the last 12 months. And the question is around stable coins and do stable coins make the interoperability problem easier or harder to solve for banks in the world of wallets?
Yeah, and great question, because I think stable coins do play a part. And obviously, 12, 24 months ago, there's a lot of hype around stable coins. And stable coins in itself, I don't think is a silver bullet. I think there are a number of different ways where stable coins help. So as an example, for efficiency of moving liquidity, atomic settlements. So without having traditional large liquidity pools held across certain jurisdictions, what you're able to do is logistically provide stable coins in an efficient way to settle payments, because transaction messaging can move as quickly as an email, if not faster, but it's the settlement layer which causes a lot of fragmentation in especially cross-border settlement. So sending stable coins from peer-to-peer, one wallet to another wallet, yes, you can do that, but also from a regulatory perspective, because there's only certain amount of jurisdictions which will allow this. There are many jurisdictions which are not allowing this. However, those jurisdictions and legislations are changing, but you've also got to think about on-ramp and off-ramp as well. And utilizing stable coins for that liquidity movement is what we're utilizing now, what we call a stable coin sandwich. It's where you'll be able to fund in fiat, whether it's in stable coins, USDC, USDT, and then off-ramp that in local currency. It allows that payment to be atomically settled, and that reduces fragmentation and creates seamlessness in that cross-border transaction as well. So there is a massive use for stablecoins. We use it, and we'll continue to see that grow as well. And then those countries and jurisdictions where legislation then starts to develop and allow that, then we'll see obviously the more adoption of digital assets and stablecoins in that sense.
You are on mute, Anton. Anton, we cannot hear you.
That's good. Well, let me start again. So I was on mute. So so the last question, and I'm not quite sure whom to direct it to. So I will direct it to all of you, and hopefully you can give me a quick and short answer before the end of the webinar. So when something goes wrong in the wallet-led journey, right? What's the simplest way we should explain responsibility to a customer? Whom do they contact first, and what outcome should they expect in the world of collaboration and more and more complex ecosystem? So maybe just probably 30 seconds opinions, because I think we're kind of running out of time. Maybe Lucina, over to you first, and then others.
Yeah, I think my very simple answer would be go to your bank when it's for money and go to Google Wallet when it's about the access or the key to that platform, right? So if it's a transaction issue like a double charge, missing refund, fraudulent payment, the user, the customer should always contact their bank first, because they are the trusted anchor of your money, right? However, if it's an access issue, like during the card provisioning, the biometric doesn't work, or you are using a digital key for your car and it won't turn, right? Then Google Wallet can take the lead and support you. And both of them definitely need to collaborate to make sure that we are guaranteeing this kind of no bounce experience to the user. So if you are contacting one and it's not the right party, then we have collaboration between us to make sure that bank can contact us for any kind of more access or key related questions.
And Sarah, what do you think?
I think in short answer to that, I think from my side will be I think in collaboration we work so well in moving money already with open banking and other things. I think when it comes to this, I think everyone needs to own a responsibility. I think the trust lies with all of us. Not just, and this one, I've answered this before on a panel. I think, often people look at big banks and go, you're the parent. And, that's where we've had the money for years and responsibility. But I don't think it works like that no longer. I think it's in the channel of choice, wherever they are. I think everybody needs to play a part in that to make sure that the client is secure, they're safe and they're protected whilst they use, these products and services. And only then when we'll all be able to provide a great service and we can continue on collaboration, right?
Fantastic, thank you. Marie, over to you.
Yeah, I very, very much agree actually with what Sarah was saying as well, that you'll have a wallet and you'll have the stuff inside the wallet, the credentials inside the wallet. And there needs to be alignment among all the parties that's, part of that new ecosystem on how do we secure it. But then the credentials itself in the wallet, well, they are, they have a nice color on them, a nice logo on them, and the customer needs to know where to go and how to get help if that credential isn't working. So I think it's about securing the wallet, of course, the repository, and then it's about finding out who can help when there are credential-specific questions. So, yeah, which requires collaboration, that's for sure.
Perfect. And David, answering this question very quickly. So, what do you see globally? Is that the what our panelists outlined? Is that consistent, or different regions do different things?
It's pretty consistent because it's about trust, right? And I think that's the thread across all the answers. It's the trust and collaboration. So the customer trusts the brand, the bank, the wallet that they're using. That's their first point of call. That's their interaction day to day. And of course, the bank and the wallet, the infrastructure provider like ourselves, we would work with them in collaboration. And that's where obviously the security layer comes into it as well, and the transparency as well. So the transparency of looking at where that transaction is at any one moment of time, that full traceability, that's important, that's key end to end. So this is really where, the infrastructure, the plumbing, as it were, comes into real effect, to allow the bank then to respond back to their customer. And of course, they can do this as quickly as possible. And that obviously allows great customer experience as well. So that's really kind of, I guess, across all the themes that we've discussed on this answer today.
Fantastic. Well, unfortunately, we've run out of time. I'm struggling to summarize this discussion. This has been really great. It's, I need to sit down and process, but kind of a few things that come to mind is, definitely the wallet conversation has moved on, right? So, and we're beyond kind of guessing on a few things. I think we're agreeing on the majority of items, right? So, but the consumer expectations on cross-border and interoperability are rising, right? So that's for sure. I think it's beyond for banks. It's beyond kind of do we embrace wallets conversations, as Sarah said, right? So it's a reality. I think banks have embraced it, and I think it's how to make it work seamlessly and in a trusted environment for the consumers. And I think for me, the number of times we've mentioned the word trust in this conversation was amazing, and at different layers, right? So it's an infrastructure layer, it's the kind of the regulation layer, but it's also the consumer trust and branding layer. So for sure, as in payments and in any other kind of complex environment, trust is paramount here. So I would like to thank you all, my dear panelists, so David, Lucina, Marie, and Sarah. And thank you for TerraPay for sponsoring this session today, and Payment Association for hosting. You have the QR codes on screen, and back to you, Berenice. Thank you.
Thank you, Anton, and thank you to all our speakers for a really insightful and interesting conversation. Thank you, everyone, for attending today's webinar. If you have any other questions, you can contact events@thepaymentsassociation.org. There's a QR code now linking to the survey of the webinar. We would appreciate it if you would complete this and provide your feedback. You will also receive a link in an email afterwards if you wish to do it later. You'll also receive a follow-up email within 24 to 48 hours with a link to view a recording of today's webinar. So on behalf of the Payments Association and our speakers, thank you for joining us today, and have a great rest of your day.